Welcome back, everybody. And we'll be starting our third panel looking at investments into women-focused fintechs and women founders. Investments for women-focused fintechs and women founders has not been very strong as compared to men, and that has to be something that we definitely want to see change. We have a stellar panel of investors and founders who have been in the space for diverse investors. She has spent 7 years in corporate banking with Scotiabank, covering energy and commodity sectors in APAC. And Jessica holds a BA Honors Business Administration from the Ivy School of Business at Western University. Jessica, thank you so much for moderating the panel, and I'll hand it over to you to conduct the rest of the show. Thank you.
Thank you, Mishir, for the introduction. I think to start, to just briefly also introduce our other esteemed speakers of today's panel, who Mishir has mentioned bring a wealth of experience as founders and investors themselves. To start, we have Debbie Watkins, CEO and co-founder of Lucy, a Singaporean-based B2C neobank startup, helping unbanked and underserved female micro entrepreneurs. Debbie has lived an early stage fund based in New Delhi, investing in high growth woman-led businesses. And Anisha was an entrepreneur twice before herself as the founder of CEO of Midela, a marketing service platform, as well as Kina Software, a digital content company. And last but not least, we have Virginia Tan, managing partner of Teja Ventures, the first gender lens VC fund based in Singapore for emerging Asia. She founded She Loves Tech, the world's largest startup competition for women in tech, and also founded Lean in China, a 100,000 strong member platform for women. So as discussed in one of the earlier panels, the potential for women as economic drivers truly highlights why fintechs need to focus on women as an opportunity. And research from Oliver Wyman has stated that financial service firms are missing out on at least $700 billion in revenue opportunity each year, but not meeting the needs of women customers. So who is addressing this gap? In recent years, digitalization has really opened access to many core needs. So how are companies providing woman-focused, tech-enabled financial products and services, and what has been the impact? So perhaps let's start with Debbie. Can you speak more about Lucy, and how has Lucy been uniquely positioned to specifically meet the needs of women entrepreneurs?
Yeah, let me start perhaps by going back a little bit and explaining some of what I've seen and what I've learned through the various places that I've worked. So as you mentioned, I've spent about 20 years now advising financial institutions specifically on increasing their outreach by using technology. And this is predominantly, although not exclusively, been in emerging economies. What I've seen conclusively throughout this is that there are three key aspects of successful products, and by successful products I'm talking about things that people sign up for and then use actively, and these can really be summarized as affordability, accessibility, and relevance. Now, digital channels, if we're looking at mobile delivery, can achieve a lot really in addressing the first two. So certainly they can help with affordability, and with sort of increasing prevalence now of 3G and smartphone going down in price, can also do a lot with the accessibility side of things. But what I think a lot of people have forgotten about is relevance. And the key point is that a product that's not relevant or doesn't add value to the target market doesn't suddenly become relevant just by digitizing it. Now, I've actually seen this misconception, if you like, in many different countries that I've worked in. And as you mentioned, I worked in more than 35 countries, and that's really been everywhere from DR Congo to Pakistan to Papua New Guinea. But what I saw time and time again was sort of predominantly banks thinking, oh, well, we're moving from urban to rural. All we need to do is establish an agent network, right? Without really thinking about the completely different lives and challenges that the people in rural locations had, and that perhaps the products themselves weren't relevant. And, of course, the outcome in most of these cases is lack of uptake. And what I'd seen as well, where I've been, was that when it came to serving women, a lot of the mainstream banks were really quite complacent. I'd say sort of at risk of being a bit contentious, they're generally complacent anyway. It's kind of like, well, we give loans and people repay them, so that's fine, and we'll just carry on like that. But what I also saw was that pretty much everywhere, 98% of bank management is male. And people do, as part of human nature, actually prefer serving people like them. And there tends to be very much this approach of one size fits all, which in turn actually becomes more like a one size fits none. So, the key thing I think here is that designing products that really solve problems for people is not easy. I did workshops on this everywhere from Mexico to South Africa and Bangladesh, and actually trying to start with the problem is a hard thing to do. It's kind of human nature to jump to the solution and try and retrofit the problem to fit the solution that you've already decided on. And so seeing the world through the eyes of the customer has been key to what we've been actually doing. A key thing is that with seeing the world through the eyes of your customer doesn't mean you actually need to be like them. It just means you need to switch off all your affinity biases and preconceived ideas and your assumptions that are shaped by your own personal experience. It's not an easy thing to do, but it's something that I've actually personally had a lot of practice in doing. And so this has really been our approach to designing Lucy. We are working to focus and empower female entrepreneurs, but that's a very broad group. And so it's also very much not a one size fits all. We've really gained our understanding through in-depth conversations with everybody from foreign domestic workers or maids in Singapore who are saving to start their own small businesses back home, right through to sort of homepreneurs who are making birthday cakes at home in their own time, and up to experienced business consultants that have a small team of remote contract workers. And so our approach has been very much to see the world through their eyes, to understand their challenges, their pains, their aspirations. And we found that they had a lot of things in common as well as their differences. And those findings and that understanding really guided the suite of services that we've designed. And so the result has been products that are really not your normal banking products. And that has been the whole point of it, is that they have been very much tailored to speaking to and addressing the unique problems that each group faces.
That's great, Debbie. Thank you for sharing that. I think I really liked how you said you have a very, consumer-centric approach, and you've identified the different users' unique pain points. Can you maybe share some specific examples of how exactly have you been able to provide that very personalized offering, especially in this digital world?
Yeah, well, as I say, a lot of it's been coming through the problem first of all, and then thinking what the solution is. So, for example, if there's quite a unique situation in Singapore, which is the live-in helpers and the relationships that they have with their employers. It's quite a unique dynamic. Is that they're sort of a family member, but not quite. And we've kind of recognized that, by and large, employers have the health and well-being of their helpers at heart and want to make sure that they are comfortable and living a fairly stress-free life, but without getting too close. We also found that, for example, that a lot of helpers tend to struggle with managing catering for unexpected financial shocks, for example, and that they don't have access to financial services from banks. And so what we've done, and the services that we've offered, is we've enabled something called wage streaming. And this enables helpers to draw down on their salary at any time during the month up to the number of days that they've worked so far. Technically, that it's not a loan because it's money they've earned. I mean, today's the 18th. I'm owed 18 days of money. But normally what had to happen is that the helper needed to sort of go with a hand out to the employer and say, excuse me, but please can I have an advance on my salary? And it, in lots of cases, got forgotten about because someone wrote it on a piece of paper and then forgot to deduct it from the salary at the end of the month. And so, I mean, this is just one example. But for, let's say, home-based entrepreneurs, for example, they have completely different challenges. So keeping business and personal money separate is extremely important for them. But much broader than that, we recognize that running a business from home is pretty lonely and pretty scary. And so what we've been focused on doing there is actually building out some non-financial services as well, including peer and mentoring groups and integrated tools to actually help connect women who are kind of on their own, gain the sort of contact and the experience and the skills that they need to help them succeed. And so, as I say, we've been looking at sort of groups in isolation and identifying the individual problems that they have, and then kind of finding creative ways to wrap this up in an app that looks and feels nice and is easy to use as well, which has been a challenge in its own right, but I think one that we've now been very successful in doing.
Thank you, Debbie, for sharing more about Lucy from a founder's perspective as well, and trying to address, the need of needing to empower and close the gap to financial inclusion. This is where I want to shift a bit to more of the investor side, to Virginia, as being one of the first gender lens investors focused on emerging Asia. Can you share a little bit more about some investment trends in other areas of fintech, which you have shown a lot of potential either in deal activity or funding?
Sure. Absolutely. Nice to meet everybody. I think the first thing to know about fintech, first of all, is the fact that fintech is not necessarily a vertical which exists all in a vacuum by itself. We have about 4 to 5 fintech companies in our current portfolio, but what's really interesting about it, when I actually think about it in terms of it being pure fintech, there was only one which started off as a pure fintech and is moving towards becoming a digital bank, for the unbanked in Southeast Asia. But the other few companies actually all started in terms of, in terms of commerce. A lot of it rural commerce, social commerce, last mile distribution, and then are all essentially pivoting into fintech. So fintech actually becomes sort of a value driver plus an end game, right? Because you can do two things, right? You can lend, you can borrow, you can save in itself, or you can lend, borrow, and save off the back of existing sort of commerce, which gives you actually better credit scoring, etc. So just in terms of investment trends, right? I mean, for example, there's a whole bunch, right? We see everything from wealth management to in insurtech in particular. One of the things that I'm looking out a lot for is what I call social insurance. So there's a company called Waterdrop, SheCapital in China, which raised their Series D was $230 million from Tencent. So they started off in terms of like a co-insurance sort of model, and actually when you're looking at co-insurance or group sort of insurance models, even though that is not necessarily, I think, just focused on women, you will notice that the majority of first adopters actually tend to be women. So I think in terms of my final point in terms of trends, right? I think when I look at fintech, and it's really interesting, that I was very happy to be invited to this forum because they talk about what is women focused fintechs. So when I use my gender lens, in Teja, one of the ways we employ the gender lens, essentially is this fintech solely directed at women, or is it disproportionately directed at women? Which means that, maybe your borrowers are not 100% women, maybe they're 90% women, maybe they're 70% women, maybe they're 80% women. So what I'm actually seeing a lot in terms of actual fintech, is actually that the fintechs that we've taken positions in, some of them are 100%, women angle, and a lot of them are actually not necessarily just focused on women, but disproportionately benefiting women, so to speak. And I want to just call a couple of examples in terms of just completely women-focused, fintech type solutions, right? For example, we have a company called Shocks in Indonesia. They are essentially a social commerce company, and so what they're trying to do is they're trying to bring last mile sort of e-commerce to rural Indonesian consumers. But what they've done is they have a very unique social commerce sort of operation, which essentially digitizes group savings. So women have been saving and lending to each other in groups for hundreds, of years. And I'm sure Debbie, who has worked everywhere across the developing world, will know that. Everywhere from Africa, India, Indonesia. So these women are saving in groups. They call arisans, and actually very often they it's like the Tupperware parties we used to see, right? They use saving groups, and then they'll use they can either use those savings to buy something, to co-insure each other, or to save it for a rainy day. So what essentially we're seeing is a convergence of using, digitizing women's existing sort of financial behavior, and leveraging that to basically bring leveraging that for essentially for e-commerce. So in this case, I think it's 100% of agents. Agents meaning the leaders of these savings groups. They're all women, 100%. And I think what's fascinating about it is that when you're actually able to digitize, sort of group savings, for commerce, what they're also able to do, especially if you can digitize them on the group level, is actually you're able to give them unique credit scoring. So for the longest time, why people, in the last mile, and especially women in this case, were denied credit is because you don't have enough transactional data to actually give them credit. But by actually digitizing this whole process, you're both providing them with financial services, but leveraging on their social capital as well, for sort of e-commerce. So I sort of see fintech, in that way, women as drivers as well as beneficiaries in terms of new internet business models for fintech. Yeah, thank you.
Thank you. I really appreciate you highlighting the social aspect. I think it's a very important focus for investors as a growth driver, women being conduits to growth throughout the economic community. So I think that's a great point to make. And this is kind of where I want to shift a bit to Anisha, with SheCapital's focus on digital-led and consumer-led brands. What are some woman-focused problems that you're seeing fintechs trying to address in India or your other focus geographies?
It's everything that everybody's alluded to here. Just in general, there seems to be less in terms of hesitation, in terms of saving, literacy. Debbie talked about the fact that it's nothing is customized. You just assume it's one size fits all. So it's interesting to see. I think COVID really escalated this in India, and we're seeing a lot of this, which is suddenly everybody's trying to think of models that are just outside the box, and now suddenly there's a drive for women looking at women investing more in women. Women investing more in consumer-led brands and being independent. So we're looking at very, very cool companies that are letting you invest in brands that you've looked at, that you like, but you don't necessarily. So women in general tend to hesitate to invest, as angel investors and getting into, being anything to do with the startup or the tech space. And so there's very interesting models coming through that are allowing you to do that and actually put token money through, kind of like crowdfunding, but in a different format, backing the brands that you actually like. So I think that's very interesting. There's more around women literacy and us being able to put money behind mutual funds, stocks. If you look at the Indian market, there's very limited stuff happening in banking and the loans that go to. So actually just real quick, for people who don't know, SheCapital is an early stage fund, but before this I was an entrepreneur. And the reason I started this was because there wasn't enough funding going, but 2 women entrepreneurs. But I also did a fact check on the Indian market just to see how much do banks themselves know about the loans that, should be given just females, because there were all these grants and loans that you read about that the government had. And we called into about 30 branches, and 0 people knew of any of those bank loans that we had accessible for women. and female entrepreneurs, and we could not find any data points on them. Even the government seemed to be very confused about what was rolled out. And so I think platforms that are now leading to more education, more validation around that, coming back and actually doing a follow through on those grants that should be, be able to give it to government, especially in the rural India aspect of it. Microfinancing has become huge, but we're not being able to track grants that are coming through government. So there's a lot of cool fintech models that are coming through that are actually, educating women about what are the options and the variations that are available to them. And I think that's what is going to change the environment. For us internally, of course, it's a big and huge push to see more women investing in women. And that's been the goal of, so Jessica, I talked to Pocket around SoGal as well. And it's interesting to see 78% of your LPs are actually women. That is not the norm across, the investor environment. As a matter of fact, it's very few and far between that's the case. So the goal here is to change that. It's exactly what Virginia had talked about, Debbie had talked about. Right now, women tend to hold on and their savings is very different. I actually asked, somebody who, works with me, how are you saving right now? And they, work and they'll have these committees that nobody's putting money in the bank, which is interesting to see because there's so much going on even around that aspect that could be changed and digitized, which now these new fintech models are coming through that are run by women, that are thinking for women, working in, homes and, as nannies or the house help and, or wants to save a smaller amount. We just talked to a fintech that, usually fintechs will ignore anybody who's looking to do smaller savings. And so now there are so many of these models coming through that are looking just at masses, which is interesting, right? India is a mass economy. You're not, the top level is not what is getting you everything. It's actually, interestingly, in this case, the 80-20 rule is the 80 that is getting you everything. And so now we have interesting fintech models that are looking at that and addressing savings for those, investing for those, and what is going to happen, especially with a focus on different sectors of women, whether they're in the rural sector, whether they're, just women looking to invest in other women and consumer brands.
Great. Thank you, Anisha. I think that's a really great point that you made and alludes to our next sort of topic. But the economic opportunities for serving women are apparent, but gender disparities in fintech does exist in both the customer base and management level as well. So shifting the conversation to investing into women founders and also diversity in the investment on the investment side as well. So women founders have historically only received about 3% of global VC funding. So that is quite a large gap. Maybe Anisha, we'll jump right back to you, but can you share a little bit more about your experience in investing into female-founded companies? Are there specific skill sets or of female founders you've identified that have had a direct impact on business?
So when I started SheCapital, there was this big hue and cry because a lot of people, including a lot of female founders, came back and said, we don't need a quota system, okay? Which I found fascinating. And so actually we should table that because this was not about a quota system. It's exactly what you talked about, Jessica. The fact of the matter is only 3% of the funding is going to female entrepreneurs. And across the globe, it goes up to about 10, 12%. And so the numbers have to change. And the only way we can change that is actually have, and I really do hope that SheCapital at some point in Teja Ventures, everybody stops doing this gender focus in a decade from now. But for now, there needs to be a conscious focus to take away what I think in most cases is an unconscious bias that exists. And that over time is changing. And I think it will continue to change as we have more and more successful role models. I mean, we started the year off with Bumble, and I think we're going to see more of that across now Asia and the wave across Asia. I mean, I'm hopeful for India. That's why we're doing this, right? I like the doing good better, but I also like the top-down approach. And I think we are going to see more and more unicorns come through from this side of the world fairly soon, given the consumer industry and the fact that women are finally designing for women and looking at women and planning for women. So I don't think there's a particular feature or aspect. I will tell you I've been on both sides of the table, and there is one thing that constantly comes up, and I see now when I sit on this side of the table. Women in general tend to be uncomfortable talking about finances. I don't know what it is. A woman who will present, a female founder that presents, and this might be different from anywhere across the globe, but I know that, I worked in the US, I worked here. Women hesitate in talking about numbers. And so my only difference that I see when it comes to female founders is I think they're really good and they're on point in terms of managing the business, but they'll hesitate in talking large scale and everything. And so I really would like that to change, because the only way, you see a solid business model, you want women to be able to talk about it. Do not hand it over to your CFO. I want you to know, I want to understand that you understand your numbers and you understand what you're talking about in terms of, and I don't see that in India, so it could be India specific, but that's the only thing if I had to change around female founders, and when they come and pitch, I'd like to change. Otherwise, I think obviously I'm doing this because I believe that that's a force in itself, and we're going to show that soon.
Right. I think that's a great point, because in early stage investing, investors want to see that rapid growth and capturing that market share. And like you alluded to, female founders may focus more on profitability or sustainability. And really, how do you address this misalignment between investors and founders? And I could bring in Virginia as well to share a bit more, but does having a greater representation on the investment side help? Does it impact investment decisions?
Thank you. So first of all, I wanted to comment. Thank you, Anisha, for acknowledging, subconscious bias, right? So when I wanted to share a little bit more about why I actually started Teja, right? I don't think when I started Teja, I was particularly prepared for unconscious or subconscious bias. Okay, and I'm glad I went through it so that I actually understand what female founders go through actually all the time. I built Teja because I see the female economy as pure commercial opportunity. I think when I first started out with this, it was quite controversial. People are like, "Oh, you're not impactful enough." I'm like, "This is a commercial opportunity," and this was because of the long time that I spent in China, where even potentially the most bigoted of male investors will actually tell you that the female economy is actually, in Chinese they say, the money of the woman is the best to earn, is best to attract, because they spend the most. So for me, the female economy was always a commercial opportunity, and it was not until I actually went out to actually raise money for Teja that I actually realized that the elephant in the room a lot of the times was that people felt that if you invest in women or if invest in the female economy, it was somehow a limitation or concessionary. It wasn't, it wasn't an opportunity. And I built Teja because I wanted to change that. Okay, so I fully understand that. I think the second thing, about what do I notice about female entrepreneurs, and actually how do I think having women, deploying capital, how does that change that? I think, yes, there's a lot of data actually saying, all these forums that we're doing, there's a lot of data saying, okay, so women entrepreneurs, they're more revenue positive, they're more focused on sustainability, break even, etc., non-reckless expansion. That is all right. And what I often tell female entrepreneurs, so Teja's portfolio is 2/3 female founder and CEO, and 1/3 male founders and CEOs. Okay, so what we focus on is actually the vertical of the male founders. Many of them, actually, I say almost all of them have mixed C-suite or founder teams. So, but I think what I often tell people who show that data to me is that if you're an entrepreneur and yes, you're revenue positive and you're sustainable, which is awesome, and often I think women feel the need to be revenue positive and sustainable actually much earlier on because they have much more trouble actually attracting capital, so they can't rely on that as fuel. What I tell them is that as a venture capitalist, remember that what drives revenue may not drive value and valuation. And remember that investors, especially venture capitalists, at the end of the day, are actually making their money or their profit off your valuation. So you may have a great, very profitable, very, like an amazing business, but if an investor cannot actually see the growth and the scale potential, or cannot say what I always say, don't just tell me what your revenue drivers are. Tell me what your value drivers are. If they cannot see what your real value drivers are and they can't see your scale, they're never going to invest, even though you are perfectly sort of revenue positive. So I think the gap in perception, I think that Jessica was referring to, the gap of perception is actually how do you bridge that? A lot of the work, what I realized at Teja is not just about what you invest in, but how you invest in. And I feel a lot of the work that we're doing with all of our founders, but I noticed particularly with our female founders, is actually we do a lot of capital structuring work. This round, next round, how do you prepare for the next round? A lot of it is in positioning to ensure that the minute an investor gets a deck, very clearly in their mind, you're hitting all of those goalposts. They can see very clearly how you're going to scale, what the unit economics of that are, so they know that when they put down $2 million, $5 million, essentially they're not funding risk, they're funding growth. And I think the third thing is about, the question that Jessica actually asked is that how does having a woman actually deploying capital, in this case, I'm the founding partner, right? Our IC is actually made up of 2 men, 2 women. We have 4 partners, 2 male, 2 female. And I think I've always believed not in diversity for diversity's sake, but in the power of cognitive diversity. So basically, because you come up with a cognitively better decision at the end of the day, I think the core with having a mixed IC and mixed partners, mixed leadership is the fact that I think the key with the female economy or women fintech in this case, or women-led businesses, is that as a woman or as a cognitively diverse investor, can you see untapped value that somebody else using a different lens cannot? And how you invest after that is the key. So let me give you one example, and then I'm just so excited about this. So there was a company we looked at in Indonesia last year. It's a plant-based food company, and it's F&B. Okay, female-led. Like a classic story. EBITDA positive, even in COVID, etc. Food is incredible, great. Presence, great brand. No VC would touch them because they are F&B. I myself turned them down twice. On the 3rd time, I sat down with the founder and I said, actually, hey, what is your vision? I started to realize that she and her co-founder, she's the CEO, their real strength was actually in food science and product development, and they could get things to market quite quickly. And so, essentially what I said is that why don't you position yourself as a consumer company, a CPG company? They launched they took out money, launched CPG products. The minute they did that and they divided the retail side, the minute they did that, money started to flood in. But what we had to do essentially is help the founders see where the real valuation drivers are, even though their revenue growth was stellar, and they ended the year amazingly on both the retail and the CPG side, EBITDA positive, and now money is flooding to the CPG side. People can't even get in. So that's just an example, because nobody else would do the deal. It's about whether you can see untapped potential, and you're not just blinded completely by what the standard VC or private equity industry is. So that's how I think of how women can deploy capital differently. Yeah.
Great, thanks, Virginia. I love that. I love how you shared that, and I think it is quite important to be able to convey, that value and the vision behind with founders and also investors. And that's where I want to bring Debbie in, because Lucy recently closed a pre-seed round that was entirely women investors. Can you speak more towards the thoughts and motivations behind that decision and the fundraising experience?
Yeah, like all best things, it wasn't really planned that way at the beginning. So, but at the very beginning, because we were designing a neobank for women, we felt that it was really important to have successful women engaged somehow in helping other women to succeed. Originally, the kind of conversations had started around sort of mentoring, contributing to forums, sharing their stories as inspiration. And I'd connected with quite a number of high net worth individuals who'd been successful businesswomen or were successful businesswomen and wanted to actually sort of pay something forward inspire, giving advice, and say sharing their views, or just being a role model of someone that women who are starting out or looking to grow their own businesses could look forward to. But the more women we spoke to about what we were planning to do, the more women we kind of really saw were like super enthusiastic about what the potential was. And not just in about helping women to succeed, but actually that they were enthusiastic in seeing that helping women to succeed actually made for a great business model. And, you know, we've got, of course, lots of statistics to back that up. We do know that women entrepreneurs given the same access to finance tend to be 2.5 times more successful than men. You know, we also know that women are much less credit risk. Overall, women tend to put much more back into building the economy and health and education than their male counterparts. But and so this was something that was kind of being recognized as well, that, you know, actually what we were going to do overall had a massive business potential as well. And so that's what really started it. The more people I spoke to, the more women were actually asking us, like, can we get involved in some other ways from a business perspective as well as just like an advisory perspective. And so they kind of asked us rather than the other way around, actually. And so what we did was start really thinking seriously about how could we make this happen in a kind of uncomplicated way. And the uncomplicated bit was actually important because for many of the women that were in contact with us, this was going to actually be their first ever single company equity investment. So sort of people had invested in funds or done a bit of crowdfunding somewhere or small amounts here and there, but we were seeing a lot of women who were saying, you know, I've got this money and I'm prepared to put this in Lucy, and I want to put this in Lucy because I really believe in the potential of it. And so we structured a what's called a safe note round, which made the whole process much easier for everybody. You know, and bearing in mind that this was in the middle of a pandemic, we were kind of just thinking it would be a small round that we could perhaps, let's say, 100K US or something in from a small group of women. But actually what happened was that people who invested then told their friends who told their friends, and we ended up getting more than $500,000 US, which was quite some achievement. And the group itself is very diverse in many different ways. So we've got everybody from the CEO of Sephora Asia Pacific through to a very senior banker in Hong Kong, somebody who was a Somalian refugee, somebody else who escaped an abusive husband and makes Mexican corn tortillas now in Spain. I mean, really, it's a very, very diverse group. And where we are now is that we closed out that round, and we're now actively in the middle of our seed funding raise, for which as of about a week or so ago, we now have a signed term sheet from a lead investor, which is great. And what we did as part of the recognition of the sort of enthusiasm and commitment of these initial women investors, we had all their portraits drawn and their bios written up, and they're all on our Team Lucy page on our website. And actually, they're all featured on our initial debit card as well. So we've got two versions of our initial debit card that we're launching, one of which is just the Lucy logo, but one has got all of these illustrations of our initial sort of founding members, Team Lucy, as we like to call them.
Great. That's exciting to hear, Debbie, to hear that, you know, there's already so much enthusiasm and interest into Lucy, and not even still pre-launch stage. So that's very exciting. And I'm sure everyone's very excited to see how Lucy does. And what you mentioned before, you know, women-founded companies, though they raise less capital, but they're able to generate more revenue, yet, you know, there's still underrepresentation of women-founded and co-founded startups. In fintech especially, I think it represents only about 12% of the total. So I think as a sort of a last question to open up to the panel, what do you think would help drive investment into either fintechs who target the female economy or female-founded companies in general. Maybe we'll bring it to Anisha to start.
I think more women already doing this. I think you need validation, right? You see more and more women successfully going and raising $1 billion rounds. I think that's validation enough. I also think women investing in women, and they're able to tell a model better. So I obviously, if I'm sitting on this side of the table, I'm more attuned to being able to tell it than someone who says, I'm going to go talk to my wife about it. I can see the scale. So there are different and balance of both those.
Yeah. Jessica, hopefully I can go next. I have a hard stop pretty soon.
Yeah, of course.
I completely, I think, reiterate what Anisha said. I think the more successful case studies that you have of just highly successful and lucrative investments, the clearer, that picture is going to be. I think what Muhammad Yunus did for microfinance, which if you think about it is an entire banking system for women. Like if you think about that, but in the fintech sense, right, just digitalizing a lot of these existing systems, which leverage upon women's behavior or serve women, as the end user. And I think, for example, one of the things I've learned the hard way is that if you say microfinance, it's like, if you think about digital microfinance, that's fintech for women. But if you go through it, you through the vertical versus the fintech for women, it actually, I've noticed actually that sort of helps you transcend sort of subconscious bias. So if you go for example, insurtech, or I would say microfinance, or I would say in this case last mile distribution or last mile commerce, we have so many companies in our portfolio like that. It just so happens that literally 100% of their workforce or group savings or consumers actually end up to be women. I actually think that will actually drive investment into fintechs, which target the female economy. I just feel I think I was too optimistic a couple of years ago. I just feel like some cautious bias is something that will take time to be overcome. So that's my more pragmatic way of addressing it. Thank you.
Thank you so much, Virginia. And I do see that we have run a few minutes over time. So perhaps to wrap up, women are significant economic drivers, in their various roles as consumers, online traffic, or controllers of discretionary spending as the topic of this entire forum. But we hope that through this panel that we can further promote growth into investment, into women-focused and women-founded fintechs. Once again, thank you, Anisha, Virginia, and Debbie, for sharing your thoughts and experiences today. And thank you for having all of us in general.
Thank you so much, Jessica, for wonderful moderation. And thank you to Debbie, Virginia, and Anisha again for, I think, this very, very impactful. And hopefully that changes the perception of other investors to get into the space. We'll be next hosting the showcase of 5 very innovative female-led and female-focused fintechs, including having Debbie talk about Lucy. So give us 2 minutes. We will set ourselves up in backstage, do a tech test, and come back. So please wait on. Very exciting session up next. Thank you.